Hey guys, this is another look at ZB. In the previous video I was talking about this wave, which could be the fifth wave of this fifth wave down on the weekly chart. And I had a egregiously bad read on this, and so I'm going to go back and look at that and figure out what I got wrong. And to do that, I'm going to look at two extensions. We had this extension on the daily chart that traded off the bottom of wave one. We traded a 38.2 retracement to a 236 target, and then within this retracement we had a lows to lows extension. It was right here, and this is also the bottom of a wave one, and we traded a 61.8 retracement, and we dipped into the 618 target down here, and that was the reversal zone. We've seen that before, 618 targets of lows to lows extensions being the bottom of a move. But I just want to look at this extension on the daily hourly chart, and then this extension on the tick chart is this wave right here on the hourly chart, and these two are fractals of each other. So this is going to get pretty granular, but I want to look at this extension down here because it's useful. So again, this lows to lows extension. So if we just do it, ZB likes to start sometimes with ones and twos. So we go 1 2 1 2 3 4 3 4 5. That's an impulse wave down. There's an impulse wave up. That's an A. This choppy mess is a B wave if I've ever seen one, and then there's an impulse wave up for a C into a 2. Then we have a 1 2 3 4 5. That's down for a 3. And then, believe it or not, this little zigzag trades as a lows to lows extension off the bottom of this wave 1. Right, so if this is the bottom of a 1, there's a little extension right here that trades and doesn't run to target, but that's enough for a fourth and a fifth wave. And that's sort of a characteristic of these extensions, is that they have tiny little fourth waves like that don't correspond to these huge wave twos, which is what sort of makes it difficult to read. And then there's a little fifth wave, and so this is a 1 down. Then this double bottom right here is an A, B, C correction up into this larger 2. And then the issue here is, we'll have a 3 down, and the bottom of this wave 1 right here, it's right here, and all of these waves over here overlap it. So none of these can be a wave 4 in relation to this first big wave 1, which means that the wave 4 has to be down here at this, oh, that's a different target, but it has to be down here, and then we work backwards. So going back, this is a 1 down, an ABC up into a 2, that's a 3 down, and then there's a little zigzag, another tiny little 4, and then the 5 is a double bottom, right? And that completes the fifth wave of this larger third wave, right? And then you can go back, you can find a 1 2 3 4 5 down here for the larger fifth wave. The fifth is just a rip into lows, basically. And so working backwards, this is an expanded flat correction. This for a fourth wave. This is a zigzag fourth wave. And then this looks like some sort of zigzag fourth wave at a smaller degree of trend. So we have a 3 4, a 3 4, a 3 4. And those correspond to, this third wave gets started with a 1 2 1 2 1 2. And then there's, that 1, that ABC into a 2. So anyway, all of these wave 4s down here correspond to the wave 2s up here getting this third wave started. So the characteristic of this wave is that it starts with these big wave 2s, and then it has these tiny wave 4s in it. This is a tiny wave 4, and then there's a tiny wave 4 down here. And ends as sort of a a falling wedge, right? It gets more and more aggressive, and you can kind of draw it like this. And this final fifth wave is sort of the underthrow of the wedge. That's kind of the pattern. Big waves to get it started, and then smaller waves on the way down. And so let me take this off. Looking at the at this lows to lows extension on the hourly chart, this turned out to be relatively simple. It was a 1 down, an ABC up into a 2, a 3 down, the 4 traded as a lows to lows extension off of the 1. There's the 1-4 relationship, and we just looked at that wave, which was the fifth wave. I had sort of fallen into the trap of thinking that this was a 1-2, and that was another 1-2, and there was maybe another 1-2, and so we were going to have all of these waves to unwind at the bottom, and obviously that didn't happen. So, looking at these two fractals side by side, these two extensions, the mistake that I made was thinking that this was a nest up here, that this was a 1-2 and then another 1-2, instead of seeing this as a complete wave with this tiny little 4 and 5. And that's what happened here. This was a complete wave, and there was a tiny little 4 and 5 right in there that traded as a lows to lows extension. So, hindsight being what it is, this was pretty simple. A 1, a 2, and then, starting from about here, these fractals, maybe from here, these fractals look identical, right? The acceleration into the 3, and then sort of this falling wedge here, where the underthrow and the capture of the target, in this case the 618 target, is the low. So the point of the exercise is simply to observe that these wave ones can be a little confusing, and what's confusing is the large wave twos that are getting things started and the tiny wave 4s and 5s that end them. That's the point. So this wave broke out of its channel. Where am I? I am right. This guy does good videos, by the way, but I am right here, right? So we had a wave down. The underthrow of the channel and the capture of the profit target of these different extensions on different time frames was the pivot. And so the question is simply, looking on the weekly chart, I've been viewing this as a fifth wave. On the daily chart now, was this all of 5, or was this simply 1 of 5? What's acting as resistance now is the full 50% retracement, which lines up with some resistance on the larger time frames. You could argue that we are simply back testing the channel that we've broken down out of. And we're having a reaction at the 8-day EMA, which has been pretty solid resistance for this whole move down on the daily chart. So again, is this all of 5 or just 1 of 5? Did they cover shorts ahead of the CPI numbers this week, and we're going to sell off again hard? Or are we going to sort of drift down overnight and then have a buyable long from lows, some variation in the morning? It could be the all the way 38.2 long from lows, which is already traded once right here, or it could be something deeper. Is the pullback buyable? That's sort of the question. And if we look at the weekly chart, there are bullish divergences on every time frame now, and they're all sort of textbook, really. On the weekly chart, I'll blow it up in a minute here, but we had the third wave down, which got deeply oversold. If this is a fifth wave down, we are less oversold. On the daily chart, if this was 3 of 5 down, we got oversold. If this was 5 of 5 down, we got barely oversold. That's sort of a textbook bullish divergence. And on the hourly chart, within this wave, if this was 3 of 5 down, oversold. If this was 5 of 5 down, if the, you know, bullish divergence, that could have been the swing low. So I guess there's two bearish scenarios. There's the immediately bearish scenario, which this short holds and we go down and what would be a third wave of this fifth wave, which would just be again another unexpectedly strong sell-off. The more intermediate term bearish scenario is that this fifth wave is complete. Let me maximize this. That this fifth wave is complete, that traded as a lows to lows extension, and we're going to trade that this is not all of 5 on the weekly chart, but this is just 1 of 5, and this fifth wave is going to subdivide on the weekly time frame, and we're going to trade a new lows to lows extension. And so this would be 1 of 5 up into resistance at around 143, 144. That would be 2 of 5. That would require us re-entering the channel though to trade that resistance. So, and then the other variation would be the same anchor to new lows. The low here was 134.30. So that there are two variations of this fifth wave subdividing and going down in extensions. It is worth noting that I've talked about this before on the weekly chart. We had a 5-wave move into highs that looks like an ending diagonal, a series of 3-wave moves that started on this 2711 weekly candle. And what I realized is that if I draw up the stealth fib support setup across this whole 5-wave move that started in 2011, the 50% retracement sort of lined up with the bottom of the channel right there. And if this is just an underthrow, you could argue, and this is actually a bottom here with the divergences and all these different time frames, you could argue that this 618 line is acting as support of this whole 5-wave move. And we have, as at least the first wave in a correction, we have returned to the zone of the 4th wave at the previous degree of trend. I think this was at least part of the previous 4th wave right here, and we are back in that zone. So you could argue that if this is simply a correction, if this is a large A down, that it's done its job and it's returned us into this zone of this previous 4th wave. So that's sort of the bullish scenario. Divergences everywhere, targets hit on all time frames, complete waves. The channel is broken. This channel right here, and we're now going to be buying pullbacks. This does look impulsive off the bottom. The alternative is that it's some sort of 3-wave correction. If I just measure this, it was you could argue also that it's an ABC correction where the A wave, ZB does this where it has really long A waves and then C waves that are 618 of the A waves. So, this could be a correction, like I said, that will trade a 3rd wave this week that could get pretty nasty. Those are the two scenarios, one bearish, one bullish. Yeah, I don't know which way I'm leading yet. I'm going to observe what happens tonight and see the structure, if whatever happens coming down looks corrective or not. That's all I have time for. Thanks, guys.